Now, right about this time, Pete, I'd normally be hitting the clapper.
Yeah.
But oh, wait.
Is this 127 or what number are we, John? Do you know off the top of your head?
Episode 126, Pete.
Oh, no, 126.
I'm pretty sure episode was 125 yesterday.
Okay.
But folks, welcome. It's great to have you here with Pete Najarian, with me. Pete, we're seeing more torso. Me, it's just a talking head.
Yeah, your desk must be a little low or something, the way it's having to move around, or I don't know.
Who knows? I'm just glad that we're at BDO's headquarters here in New York, big accounting firm, and speaking to a bunch of multi-billion-dollar family offices. So
nice.
That's interesting. And of course, you are tuned into the Rebel's Edge. We've got Mr. Gronkowski handling the board today and putting up the visuals that you'll see. Prior to the Fed, we have the Dow down 130 points, S&P's down 12, NASDAQ down about 1/3%. So more or less in the greater scheme, folks, that's pretty flat for the session, given that we've got a Fed that's going to make a move, I believe, and I think Pete does too, of 25 basis points in about an hour from now. Yep. So let's get started with the macro minute, Pete.
Let's do it.
Government bond yields are up, perhaps because they do anticipate that 80% of the people that are following this believe that we're going to see a 25 basis point hike. I think a 50 basis point hike or a 25 basis point cut would both be negatives. What do you say, Pete?
Yeah, that sounds right to me, John. I mean, there are certain things that everybody is obviously aware of, and you and I have talked about what the Fed's most likely to do. I think actually, John, it might end up being like it has before, all the jaw bowing that happens afterwards, right? I mean, I think we're going to hear a lot of conversations on what they're seeing, how they're seeing it, what they look at inflation. They talk about data all the time, which gives me this question for you, John. When they say they're going to probably pause on the next one, how do they know that since they don't have the data yet? Just a question. I'm just throwing it out there. You know.
That is one of the things we do is throw out those questions, even if it's actually more of a statement in the case of what Pete's saying there. All right, let's talk about fantastic futures, Pete. Not so fantastic. Natural gas was down 3.5% today. It's down 45% year to date. If you are somebody who wants to sell it down here, good luck to you. I am not giving you financial advice, but I am thinking you could get wrecked being short nat gas down here at $2.30 per BTU. What do you say, Pete?
I'll just throw out one other thing, John, and I agree with you on the nat gas. We've been talking about that a lot over the last couple of weeks and specifically in the last couple of days because of the path that it's been. How about wheat? Now, we don't really talk about this much, but when we talk about inflation, we look at all these various things. How about the fact that wheat is at the lowest levels that it's been, John, since July of 2021? I mean, that's pretty unbelievable. I encourage people to take a look at this one because will we see some sort of a bounce? Is there something going on that we don't know about the pricing? CME is the place to go. We know that because those guys have incredible liquidity and you're able to do it whether it's futures or options. So it is interesting, and it's interesting to see exactly where they are right now.
Well, that's fantastic futures, folks. Let's dive in, Pete, to the stocks that were making big moves today. Nobody bigger really than GME because the GameStop shares were driven higher by the apes, of course, who were reacting to the first profit in multiple years. It was up over 55%, pulled back. I'm sure some people were shorting it up there, but it has pulled back and it's now up, I think, 37% on the day. What do you think of GME or GameStop shares here, Pete?
Well, it is interesting, John, because they actually showed a profit and they beat on their revenue and they did a lot of positive things that haven't happened in a really long time. Matter of fact, last year they lost $147 million. And here they are now all of a sudden in the positive territory. So a lot of good things happening for GameStop right now. I'd still say we've got a 20% short interest in there, John. That's the reason you're seeing the kind of move that you're seeing today. I mean, These squeezes do still happen. We've talked about meme stocks many, many times. We talk about short squeezes. Well, they still are out there, and there's plenty of them. But, you know, when you look at the market cap and you see that this thing is starting to get back up into a little bit more of a reasonable level, it makes you start wondering, is this a real company again? And I'd start to say, well, yeah, is this potentially a company that is making money and potentially maybe into the future even a little bit more, and we might see this stock even fly up a little bit faster until those shorts start to shrink down a little bit.
Yeah, the amount of shares there are in GameStop, folks, it says that on normal volume that they've traded, it would take 12 and a half days to cover. So obviously on days like this, you are seeing a much more robust trade in the shares of GameStop, just like anybody that makes such a big move like this. But 53 million shares so far today, Pete. Normal is 4.5 million shares. So you get the idea. They're cramming a lot of those 12 and a half days in today to the covering those shorts up. But like I'm sure some people are still shorting even at these levels, Pete. All right, let's take a look at Ollie's Bargain Outlet. This is a household name. I mean, Ollie's.
Is it?
Pete, they're one of those stocks, I think, that's a trade down stock. Like Aldi's, for instance, like any of the places, the dollar stores and things like that. When the consumer is not feeling as giddy and when they're worried, and who could blame them, when you hear of bank failures and all that sort of thing, that's not usually what gets consumers excited. It's more or less what causes consumers to pull back. What did you think of Ollie's earnings today, Pete?
Well, I think that the earnings themselves were great, John, but when you go back, it really didn't start till really late in the quarter, and that's when they started to zoom. And you and I both know that, because when you think about it, we've heard a lot about this trade down, and I think this is a real thing, and certainly is. But when you look, they were struggling in a lot of different categories, John, and then all of a sudden they weren't. And as people came flying in, like we talked about with Walmart, how they were the trade down at multiple different ends of the spectrum. So I think it's pretty interesting. Will they be able to continue? That's really the question. It's all about the economy, I think. If the economy stays where it is right now, these guys are probably in a great spot. But let's also remember, part of the reason they did as well as they did, John, was they're expanding. They're opening stores. As a matter of fact, they had 470 stores or something like that. They plan on having over 1,000 in the not too distant future. So they are finding ways to kind of get themselves into a position where they can be a lot bigger, a lot faster. And if that's the case, obviously revenues are going up, everything else, and then it comes down to margin.
Yeah, I'm also really, their motto, by the way, folks, is get good stuff cheap, I think is their motto, Pete.
I like that motto.
It's not a bad motto. It's kind of funny, though, because you don't hear that out of even Walmart. You know, they don't go out and say, get good stuff cheap. But yeah, keep your eye on OLLI, folks. Consumer confidence, when we get the next reading, I think it's going to show a pretty big ding into the consumer confidence because of these banks. All right, let's talk now, Pete, about LAZR, because we had put buying in this one for weeks. I mean, LAZR, if you take a look at these options, Goldman downgrades them today. But look, do you think somebody might have leaked that downgrade by Goldman was coming, Pete? Because when you look at your screens, folks, you're seeing an awful lot of puts being bought from multiple levels higher over and over and over again as you take a look at that unusual option activity that Pete and I have cited multiple times in LAZR.
And this one, John, might be a stock where, yeah, there's a lot of shorts in there, but maybe they're there for the right reason. I mean, they are shorting the living crap out of this thing. You look at the debt to cash, not a great look right now. So from a financial standpoint, I think it's getting a little uncomfortable. And you look at the cash burn, and are they ever going to make money? I mean, that's, you know, I know you and I talk about this all the time, and it's kind of humorous or whatever, but the reality is when you've got companies out there, and we have many of them, and they've been out there in the public for many, many years, when are you going to make money? And that's a big problem, right? I mean, whether you're Uber or Peloton or Luminar, whatever, at some point you've got to put yourself into a position where you actually can make money. These guys aren't. They're just burning cash. So I don't know how much further they're going to go down, John, but I don't expect to see them on some sort of a big run to the upside unless we get a squeeze.
Yeah, 28%, almost 30% of shares of the outstanding shares of the float are held by shorts right now. And again, just like we showed you with that screenshot, folks, a much smarter way to play it. We don't trade your money for you. We can tell you what we would do. I would not be shorting this stock, but I would consider getting back into some shorts in the way of owning puts, because you define your risk when you enter, when you buy a put. It's a much smarter way to play it. You don't get that same squeeze to the upside like you were seeing in some of these other stocks that were screaming to the upside, like GameStop.
And John, right. I'll interrupt you for 1 second, John, because a great example of that was just last week. How about Credit Suisse? Credit Suisse is down there trading at about $2, a little bit more than $2. They're buying the $2 puts. That's the smarter trade. And you get leverage from that because each option, obviously 100 shares, all of that. And hopefully people understand that. But that's the best way to trade those things is through the options like you're saying. And you don't have all the critical things that go along with trying to short a stock and what could potentially happen to you.
That's good advice, Pete. Let's talk about 89 Bio. This is a small biotech company. The symbol is ETNB. ETNB. They basically had what they thought was a big win for a fatty liver disease, Pete. And obviously, people can be killed by this fatty liver disease. ETNB shares turning over big numbers today. It was up almost 40% at one time. Now it is up 26% going into our discussion right now. It has traded 23 times the normal volume of 1 million, which means, of course, we've traded 23 million shares so far today.
Yeah, important company, important work that they're doing. You and I know this all too well. Our father was a transplant surgeon, focused on what? Well, it was kidney, it was pancreas, it was liver, it was islets. You get the idea. He knew all about all these different things, and this is a major issue. And when you look at the numbers here, they look pretty solid, John, for the phase 2. But let's always remember, this is phase 2. For those that don't understand how this whole thing works, to get your drug approved, you got a phase 1, a 2, a 3, and then you go for the potential of getting the thumbs up. So this is a long ways away. I will say that there's a lot going on, and they are obviously, like most biotechs, they're burning through cash. But if they can get a drug, they've only got 2 in the pipeline. If they can get one to public, that's a really big thing. And it's not only great for our health, but it would be great for their stock as well.
Yeah, it sure would be, Pete. And obviously, Pete and I root for any of these companies that are trying to address some dread disease or whatever, or some malady that people develop because of their own carelessness in some cases. I'm not making a judgment on that, but I am saying that just like Pete says, it takes a lot of money to get from clinical to an approval. And you got to be worried about the burn rate with some of these stocks. Yep. All right, let's talk, Pete, about Zion. This is, of course, one of the stocks that was pulled into the banking crisis. Did they deserve to be? Well, it's a Utah-based bank. Shares were $52 at the end of February. And on the 13th of March, which is, 9 days ago, shares traded all the way down to $22. Well, they're making a move back up pretty good right now from that $52 down to $22. Boom, now they're back to $32. Somebody buys an upside call spread, Pete, or at least an outright upside call. They bought the April 37.50 calls. They bought 5,000 of those, so that's 500,000 share equivalent. Call it in rough terms, some $16 million potential investment just on the upside between now and the third Friday in April. And they paid about $1 to $1.30 for these particular calls. So every call's for 100 shares. As always, a $1 call then would be $100. times 5,000. That's a lot of money somebody put on the table for bang, a quick bounce back over the next basically 3 weeks in Zion, Z-I-O-N.
Yep. And we're seeing a fair amount of that, John. In certain names, you are seeing some call buying. There are certain names in the financial world where you're seeing a little bit of put buying as well. I got an interesting one for you as well, right there in the financial world, lending, financial services. I'm talking about SoFi. Now, we're very well aware of this name. We're very well aware that this is another name that was put on a football stadium, which has been a curse for a really long time, as we know. Whether it's, I mean, there's so many of them that you can't even count, but it has been brutal, and we've seen it time and time and time again. Well, SoFi is down there towards the lower end of where they are, John, for a 52 weeks, and they're at 580 right now. Somebody's out there buying the April 6th, the 5 puts on April 6th, 10,000 of those trading. They're only 8 cents, but this is a pretty deep, steep place to get to from where the stock is right now. I'm not saying it can't happen. I think it absolutely could happen. It would have to push itself down there near or to those 52-week lows that are closer to 475 to really get any profits out of this trade. But that being said, I don't think this is such a stupid trade. First of all, it gives you an opportunity to get into a position where if it goes down, you have really great potential for some gains. And if it doesn't, it's not as much risk that you're putting on. So I like this trade. There is a big short here, maybe for the right reasons. They have a boatload of debt. So there's a lot of things maybe working away from SoFi right now. This would be a name I'd keep an eye on, but I think it's pretty interesting to see in the environment we are right now, some of that big put buying we're seeing there.
Yep. Well, when you're seeing some people may have large positions that they're putting on also, whenever Pete and I see big put trades like this, we wonder, okay, is that a protective trade or is it something that is a bet to the downside? Time will tell, but that's pretty good sized trade, Pete. Yeah. What do you got as far as sports?
All right, John. So we got a couple, and Gronk and I were talking earlier. He said, "Hey, I noticed you're not going to talk about the baseball game last night." And I said, "Yeah, you know what? It was great, but there's a couple other things that I think actually really stand out right now. One of them is the NBA is almost at the playoffs. Does anybody care? Again, does anybody care?" And I say that a little bit, tongue in cheek. But how about this, John? If I told you that 2012, the shortened season, so it got a little more interesting because you didn't have a lot of games you could lose in a row and everything else. You got to win. They actually had some ratings. They had a 3.3 on the rating scale. Well, they're at the lowest level, the NBA, the lowest level that they've ever been. Their ratings are that bad. And oh, by the way, if you think I'm exaggerating, take a look at the NBA All-Star game and take a look at what those numbers were. The worst in the history of the NBA All-Star game. So is it load management? Probably. Is it the fact that some of the big cities that are out there don't have a team that's playing any good anymore, John? I mean, you look at New York, you look at the Knicks, you look at the Nets, you look at some of this, they're somewhere possibly within the playoff picture. But it's the smaller guys that are actually the ones at the top. And here's kind of a list. By the way, Magic Johnson is as critical as I've been, and you've been a little bit, John, as well, but about the load management thing. He thinks it's absolutely awful. He's been very outspoken about it, and I love that he is because he's joining Anthony Edwards and others about how bad those things are really going. But Detroit, they've already been eliminated. Chicago, very much struggling. Miami, they're on the fringe. Golden State, they're a 500 team. Yeah, that's Golden State with all the great players they've got. They're a 500 team. They might get in the playoffs, maybe not. The Lakers, they're in a huge struggle if they could possibly get in the playoffs. And then Dallas. So those big cities, John, those are some of the bigger cities. Those guys are unlikely or maybe getting into the playoffs as a possibility, and then they're out early. But that's got to be hurting some of the ratings as well. But what do you think about the NBA? Does anybody care, or is it all about March Madness and college basketball?
Well, so that's a great question too, Pete, because there's a couple things going on. Obviously, one of them is, and it happens every year, March Madness. This has been a completely mad March Madness. We talked about Fairleigh Dickinson beating Purdue and a whole bunch of other upsets like Princeton. going as far into the tournament as they've gone yet again. There's also, Pete, the idea that the NBA, and I think the NFL should be paying attention to this. The NBA pretty much moved exclusively over to cable. The more that they are on cable, the more, of course, or the less access people have, because not everybody is paying for that access anymore, but over broadcast television, they would. So here's a good example. In 1993, the All-Star game drew 23 million people. This year's All-Star game was probably next to nothing. Is that because of cable? It's not because of March Madness. So they can't blame it on that. But is it because of cable? And or is it because people just don't get as into it until the playoffs? Now, what they got to worry about, Pete, is the playoffs even. In 2020, they got, so that was the first year of COVID, but they got 7.3 million people watching playoff basketball for the, that was the average for playoff basketball in 2020. Last year, it was 6.28 million. So you're dropping by 1 million viewers just over 2 years. So that's not the only point that I'd show you, but I'd say the NFL should be paying attention. They should realize the more they go to some situation where, oh, you've got to have a Prime account with Amazon to watch an NFL game, or you've got to have cable to watch an NFL game. These numbers are going to be coming down, except for the Super Bowl, I guess. And that's a worrisome thing, especially with these contracts elevating over, a 4-year or 10-year period, depending on who the player is.
And it's why we've been so critical on some of those that are up atop, making all the changes and making all the decisions for the NFL and the NBA and maybe even the NHL, but certainly Major League Baseball as well. Some of those decisions are bad ones, John. You're right about that cable. I hadn't even thought about that, but you're exactly right on that. That just closes out that many more people from saying, you know what, let's flick this on and take a look. The next one I got for you, John, is the NFL. I know we talk about it a lot, but we're 1 week into free agency. And you're going to like this because, at least from my perspective, and I'm not the only one, but I think that the Chicago Bears are the number one when it comes to what they've done with this team since March 15th and free agency began. First of all, they had the big trade, which was totally fine. They've got their quarterback, I think, and I think they think so as well, obviously. They've got their quarterback. They like him. I like him. I think Fields is fantastic. Did he have anybody around him? No. That's why he was such a high pick last year, because the team was so bad. Now you're starting to build a team around him. You get that big trade with Carolina. You go down a few notches. You're going to go for an offensive lineman anyway, because somebody's got to protect this guy after he's had 55 sacks last year, right? And this is a guy who's mobile. He's athletic. He does everything you'd want. But you also picked up a top 20 receiver. You also picked up a bunch of picks. John, they got the number 9, 54, 61, 64 picks in the draft this year. In other words, 4 in the first 2 rounds. So they've got a lot of things really working in their favor, I think. And, of course, you and I both know, they signed 2 really good linebackers. They've signed 2 or 3 really good defensive linemen. And they did pick up also a guard from Tennessee who's only 26 years old, who's about ready to explode as one of the great guards, I think, in the NFL. So there's a lot of good things going on with your Bears. And we can go to Denver next. But what do you think about the Bears right now, John?
I love getting a new wide receiver in there, Pete. They also got a tight end, Robert Tonyan. You mentioned both those linebackers, Edwards and Edmunds. Yeah. I know that sounds like, the same guy. It's not. Tremaine Edmunds and TJ Edwards, a couple of stud linebackers. And Nate Davis, like you said, that big guard. I think this is a fantastic move by the Bears, and they will be setting themselves up with the right moves in the draft here, Pete. They're going to be, I think, just doing tremendously well. The Jets, I got to, tip the hat to them. Yeah. Texans as well, but I know you want to hit what's going on over with the Broncos.
Yeah, the only reason I'm going to give Denver number 2, John, is this. They got no draft picks. They got nothing that they can give people for the most part, and they overpaid for Russell. So what are you going to do? You're Sean Payton. You come in there. You had the team that had the best offense in the NFC from 2006 to 2021 in terms of scoring points, right? So this guy knows a little something about offense. So he knows what he could do with a short quarterback. That's what he had before. And I think that is an advantage. One thing that he addressed immediately, John, he goes out and grabs 2 offensive linemen, the 2 highest paid offensive linemen so far in free agency. And he's got them a guard and a tackle who are going to be able to protect Russell and give him an opportunity maybe back there to throw the ball a little bit better. They also picked up some defensive end. They re-signed a linebacker. They've done everything that they can do. Because we got to remember this. They've spent, by the way, $250 million in 1 week, John. That's to get all of these guys. I mean, that's pretty outrageous. The first pick they got in the draft this coming year, because of all the things they did, including picking up Sean Payton, is not until the 3rd round. So they got nothing in the first, nothing in the second. So they've gone out in free agency and said, all right, this is how we're going to have to build it. You got to pay a lot more because when you draft a guy, John, they're restricted on how much money they make. But when you go out in free agency, they spent a lot of money. I said $250 million. That's the total of all the contracts, but still, that's a big number, and they've spent a lot of money. So Denver, they may have made the right steps. I'm not sure Russell's the right quarterback, but they did pick up a quarterback from the Raiders as well, John, who when he had his opportunity, he did pretty daggone well. Kid out of Auburn.
Yeah, Stidham.
Yep.
He was good, Pete, and I agree with you. And the Raiders more or less finished the season up with that guy, I think, didn't they?
Yep.
After they downgraded Carr.
Mm-hmm.
But I think having 2 big offensive linemen, that's a huge plus for him. Veteran offensive linemen, 2 big running backs, a big tight end. Chris Manhertz or something like that, I think, was a guy they picked up as well. So I don't think Russell Wilson had any excuses anyway, Pete. But now with what they've just given him, they have far less excuses, or he has far less excuses. And if he doesn't perform, look for that guy Stidham, that Auburn quarterback that Pete mentioned, to really step in there. And, it's Walmart money. They're spending Walmart inheritance on this team, Pete. But I don't even think this makes a dent in that Walmart money.
No, I think they're doing just fine. The Waltons are doing just fine. We're not worried about them.
No tag days for that family. All right. Well, we have one more day of the Rebels Edge this week. That'll be tomorrow, Thursday. We're going to have a quick 3 at 3 later this afternoon with me. Until then, folks, have a great day. We'll see you tomorrow.